Welcome to the 17th episode of the TradePod. Bit, it's a pleasure to have you here. How are you doing?
I am not too bad. Thanks very much for having me. The first time we met, it's going to be an interesting chat to have,
It
and
is.
what sort of directions we expand. So I'm all ready for it and good to go.
Cool. So, tell us about yourself. What's your story? When do you started trading?
Oh,
When you started trading,
I'm
let's start
glad.
from the
Yeah,
beginning.
I'm glad we're on audio, not on video. Because I will have to give my age away. So I started in 1983 at UBS Zurich. So I'm born in Switzerland, moved to the UK in 97, which you will hear through my brief intro. So I worked as a spot FX trader at UBS Zurich from 1983 to 1997. In 97, I moved to the UK, to London, to take a job with Morgan Stanley, where I was planned to set up a prop desk. What happened in 97, those that are in the market for a while longer know it was the Asia crisis. So we had the currency devaluation in Asia, we had the Russian deval, we had LTCM, we had a lot of high tense events, and there was no one in Morgan Stanley there at the time that had a big sort of deeper knowledge on currency devaluation, which I obviously had from the EMS crisis in 1992. So they felt it's a good idea if I trade the Asian currencies. So I was trading the Asian currencies for Morgan Stanley in 97, 98 through the currency crisis, all the fund devaluation in Thai baht, Indonesia, Malaysia, and so on and so forth. And for me, the great moment was that up to that point, I only traded G10. I didn't trade any emerging markets whatsoever.
Okay.
And so it was, I was probably the right guy for those currencies because of how devaluations work, because we saw that in Europe. And I had a lot to catch up on knowledge about emerging markets, right? But, you learn on the job, you learn rather very quickly, because if you don't, you get ran over, right? So you learn very quickly. But what it gave me is the full picture of a market and where correlations start to happen when you have, like in later cycles in my career, when you suddenly start to see emerging markets start to being in trouble, the impact it's gonna have on the G10 equities, bonds, and so on and so forth. So it was a good, as we call it, not sure how many listeners know the expression of the canary in the coal mine, but that expression comes from the old days when people were in the coal mines, because we had no measure of the poison in the mines. They took a canary down in a cave.
Oh,
This is no joke, right?
I didn't know that.
So when the canary falls over, they evacuate the mines, right? So that was in the old days. And so this is an expression that survived in the market. Maybe just because I'm old, maybe not with younger ones, but so we tend to mention this at times. So if I trade FX as a macro player, I obviously watch equities, bonds, and all the rest of it, commodities. And so for me, it's like placing those canaries in other markets to be put on alert if other market starts to move. So I know there's a potential correlation coming in FX, but that's something we
But
may discuss a bit
just a
later.
question right there.
Yeah.
How do you connect between each other? How do you connect between equities and, let's say, G10?
To be honest, it's basically you just watch. I have like all those screens. So I have one page is full of bonds. I just watch US equities because that's the only thing that matters for FX correlations. I
So, so,
watch
so you look for recurring patterns, basically.
no
No.
instant moves, no patterns. So if you trade correlation, you do not watch pattern. Well, it can be that you see a pattern develop and then you go like, okay, I believe stock's gonna crash. So okay, that means risk has to sell off in FX. Yeah, that's one way. But on a day-to-day basis, trading correlation means you got to watch everything simultaneously, right? So I watch bonds, I watch equities, and I watch FX as a sort
Got
of
it.
triangle.
So
And
if there is
obviously,
a condition happening, so you
yeah.
you make a decision.
So in a perfect world, you would expect, there's a core correlation that always work. that way. Let's say if equities go down, risk FX goes down, bonds
Yeah.
are going up, so yields come down. So you know the standard correlation. So if everything just takes over, you know, maybe you have risk, maybe you don't have risk, maybe you have a view, maybe you don't have a view. But if we just talk about correlation, it's basically you watch the moving parts. And if one moving part suddenly moves the other way than it should, that's creating this sort of alert. And if you know your stuff about trading, you know what that sort of means, right? So if you suddenly see bond yields start to go up in the US, despite equities being weak, that's a problem, right? Because that's going to push equities over the edge even more. And then that leads to weakness in dollar yen, cross yen, the usual Aussie CAD, the usual risk pairs. So this is like, now we just gone really deep dive already into the topic, right? So basically, if I just pedal back a little bit, you know what, there's only like 10, 30 seconds left of the career. So basically, I then worked for Morgan Stanley for up to 2004. Then Morgan Stanley didn't really want to go into prop. So I changed and I was hired by Goldman Sachs, MacroProp Group, so the legendary prop group from Goldman Sachs. From like 03 to 09, when it had to close after the financial crisis, when prop was no longer allowed under the Volcker rule. Then I just had a few years of running global trading desk for banks before I sort of exited the city in 2015, 2017, and then started my own business. So we come to that. Now back to the market, when we talk correlation and we talk education and we talk retail, the problem is that retail, there's this misconception. So retail opens a trading account, has a platform, has a chart, and they draw a few wild lines, and then they just suddenly think they're traders, right? Which they're not. And that's why 90% of them break the account or lose the account inside of a few months. Why? Because they have no knowledge. What is beyond me is how retail can actually think, that they just can't sit down and trade and be successful after, you know, when you look at pros that took years and years and years of a journey to actually get there where they are. To be honest, I learned through my career. Like I just alluded in the beginning, in 97, I was trading emerging markets. I'm already in the market since 1983, right? So you can say 14, 15 years old, I learned the next step of something big, building block of being successful in a market. And later in life, after that, I was suddenly involved meeting policymakers, discuss markets with Fed officials, ECB officials, you know, where the game just got even bigger, right? So this is a journey. And the problem that retail has, they're all about this quick fix. They're falling for the wrong people. Let's say whether they follow LinkedIn, YouTube, Instagram, TikTok, whatever the platform is, and follow those people that are, you know, talking about Ferraris and villas and yachts and all that stuff.
Portray themselves as successful.
Right. So they betray that sort of, oh, you know, you hardly have to work and you get rich, and that just is not the truth. So the people that seek me out are the people usually that actually know it's work, right? I can give you as much knowledge as I have, which is 40 years in this market. But you then have to go away and continue, right? So if you just listen to me and we work on stuff like carry and correlations and cross, you know, all the topics that you need to be a successful trader. And this is what people do with me. So it's basically they learn every element of trading. And then, you know, I have like many people that after a year or two, depending on the candidate and how hard he works, because the dream is always the same, is becoming a full-time trader. But for most, that's not realistic because they don't necessarily put enough work into it to actually be able to do that. And most of them are not patient enough. It's a bit like if you go to the gym, right? If you start the gym, you kind of lose weight very quickly, and you know the first 3 months is fantastic, and you know, and then suddenly you hit like this dry spot.
For sure, yeah.
Or you don't lose like a kilo for like 10 months, right? And it's those time when you kind of feel you kind of work at standstill. Even though in the market it's probably less as extreme, it's probably less standstill, but it's like until it's such a people see it when I invite them into my chat room for a free trial, those who sort of thinking of joining. I mean, they stand there and they just see Mount Everest in front of them, and they go like, "How can I ever understand what he's talking about?" Right? But slowly they do. Right? They learn, they see. Yeah, it's overwhelming, no doubt about it. Markets, it, right? It's big, right? It's big. It's a lot of moving parts. It's a lot of stuff to learn, and when I have retail, and I'm thankfully in that position that I don't need to sell courses, which means I be honest to people when I feel like, you have the wrong attitude or wrong approach, then I tell you. I would tell you if it's not for you, as in the student. But what I also say is every retail trader that is serious about learning, why would you not spend a bit of money? Some are maybe crazy expensive. I just charge my time because that amount of money is so well invested because you're not going to lose. You know how to treat your money. You learn how to risk manage. You learn a lot of stuff that basically is the safety valve on the downside. How much you progress on the top side, that's in your own hands at the end. How much you work, how much this is really for you, that you actually, there are some people, there are not many, but there are some people, it's just not for them. They only find out over time it's not for them, right? There's not many of them, but a few are there. And so I always say to people.
By the way, regarding this, how do you manage the psychological attachment to money, especially when starting with limited capital?
Yeah, to be honest, this is all built up. So the way I teach is really first the three main topics that really set the scene, right? It's like everything that comes from carry and correlation. That is what moves the market every single day. So if you understand the big movers, let's say what is FX? FX is foreign exchange moving due to net interest rate differential. Then we go back to carry, the whole yen story, blah, blah, blah. So you learn all those elements. Then it's risk management, right? So end of the day, obviously, if someone has a small account in the beginning, and to be honest, you just alluded to it, there's one session is about psychology. So then I wear my white lab coat and I become the professor. Right? No, but it's true. Trading is a lot about psychology. If you've been in the game for such a long time, you sparring with Mike Tyson. Well, now then you get like hit in the face, you fall on the floor, and then it's how to get up. And the how to get up or being able to get up means risk management. If you have a proper risk management, I lose, right? My hit ratio is probably around 70%. So that means out of 10 trades, I win 7, I lose 3. So losses are part of the game, but you have to learn how to lose and how to control the loss. That means
but you also need to adjust. You also need to adjust the risk management for each student.
Yes.
Right? Because each student is different. Each student would accept a different level of risk.
Yes. To be honest, that is so basically what I teach is around the risk management side is just how it's managed. The size of what let's say, I would say let's say a number. Let's say you have a 10K trading account. Let's just say 100K, whatever, it doesn't matter. Right? Yeah. So you as an individual set how much you're prepared to lose at the start, right? Some people say, okay, all 10K, okay, whatever. It's not ideal, but it's a free wish, right? But in theory, let's use 100K because then it becomes a bit clearer, right? So when you have 100K and you go like, I want to give trading a go here, right? So then right before you start, you actually go like, okay, if this doesn't work, I want to walk away with whatever, 80 grand, 75 grand. So you said you kind of what you prepare to lose at the start, 20, 25%. 20% is probably about the right amount to play, right? If someone is rich and money doesn't matter, he may say 50%. But to come back to your point, is people set their own limits and then we work around that, right? So I don't set that. That is a personal thing to each individual. Someone says me, to be honest, I'm not bothered to lose 30%. Okay, we set it up on 30%. That's not my problem, that's their problem, right? So how much money
Yeah.
they prepare to lose is individual, right? As you rightly say. I just put the sort of system around it, which is very simple, which is just really based around a numbers game of, I usually use 100 days. 100 trading days are roughly 6 months, right? And this is a system that is sort of, well, system, it's not a system, it's just a plan around people that would have the ingredients to go full time, that, not at the start, we're talking about after the course and when they sort of really learn, but it's basically centered around a 6 months plan that the money they happy to invest lasts at least 6 months. So they have savings on the side, right? So which they pay you life. And so you have at least 3 to 4 months free trading. So you're not mentally stressed that at some point you have to make money,
As
right? Because,
full-time traders?
yeah, right. So you need to have a system that, because when you get to be honest, someone who keeps on losing money in the first 2 months, there's already timeout and review, right? But it gives you 3 4 months to see if you're capable of making enough money to support yourself. If you're not, then you still have 2 months left to find a job, right? So that's just the reality of it. So what I say to people, everyone who is working with me will be guided through that. Right? I will tell people whether they're ready or not ready. So that usually doesn't start before 2 years, to be honest. You sort
So
of
when
do the
should I?
course.
So let's say I have the capital and I want to learn how to trade.
Yeah.
Now, when should I quit my job, for example?
To be honest, so what you will do, let's just say you learn to trade, blah blah blah. Let's just say
Yeah.
you already done that, right? So basically, every trader has to put himself a amount of money they need to live, right? So everyone has a number, which includes paying all your rent and housing, insurance, and have your odd lunch over the weekend, maybe even
Children,
a
wife, and
holiday,
so on and
right?
so on.
Let's just say everyone has a monthly number that he needs to earn to live, right? And hopefully a little bit more, so you have a little bit of extra, right? So that is your benchmark, right? So now you look at your trading. Now, there are systems which I can't go too deep into it, otherwise I would already, talk about all the entire course. But it's basically the moment you establish your hit ratio and you establish your kind of average returns, it's really the hit ratio that is important. And that is where it doesn't matter whether you have a small account or a big account. Well, the bigger the account, the easier it is in a percentage return, of course. But when you have a stable hit ratio, 70%, whatever, then even if you have a smaller account, you can increase the leverage as long as you continue to do what you did up to that point. Because if your hit ratio is 70%, that means you can start to carry more risk. If you don't have the money to top up your account, it has to happen through leverage, right? But leverage still managed in a way that your risk, because you're still losing 3 times, not that if you run into the first 3 losers, you have a problem, right? So you still have to manage that size. But reality is you have to push yourself. Either you have the money to top up your account, or like I said, take more leverage until you comfortably reach that number for a while, right? Not 1 month, a few months, right? So you need to be, let's just say a number. Let's say you need to make $5,000 a month, right? Whatever
Okay.
that number is, right? So you need to comfortably make those 5 grand in months 1, in months 2, in month 3. So we don't want to have you're just lucky for a month scenario, right? So you need to be, and what often happens with people once they get into that groove, where they know what they're doing, they actually do make money, then they also, through that journey, they also start to find out, which I call smart risk taking, is there are moments when you just know those moments you have to have a bit more risk. And those moments that are a little bit less certain, you have a bit less risk. So the smart risk taking has a lot to do, or smart risk management has a lot to do
And it
with.
depends on the strategy.
Sorry, depends on?
On the strategy? Or depends on the
No,
market
to be
conditions?
honest, it's right. No, it's basically for those that are in the market, they will know sometimes things just line up. You have the chart that works, you have the story that works, you have your feeling that works. So we call it when the stars line up, right? When the stars line up, you have to have more risk. There are certain elements out there, whether it's coming from data, whether it's coming from policy, whether it's coming from wherever, where we just know where this next move is going to be. When you think about summer, when they had to blow up in the yen and the equities, we just know where it's going. Well, then you've got those moments which are not happening every day, right? You've got to just really push, right? Because those are the moments where you're going to have more risk, where you make a lot more money. And then when the market goes back to something which you're not sure of, you have a bit less money. So the idea is, as you progress as a trader, you start to know, the market is a lot about repetition. I have thousands of repetitions in my head after 40 years. I know exactly what, if A happened, B happened, if this happened, that happened. Like there's a certain repetition out there, even always in a different form. But when you learn the key structure, right? So there are moments, I don't want to call it a crystal ball, but experience does matter, where you see certain repetition, where you know exactly what's coming, right? And on those moments, we take a lot more risk, quite a lot more risk. And that pays for dull weeks or dull days, or when you lose money or when you're less sure, right? So you have to have something that compensates, right? A year is a long time. So you have to cream it when it's there, and you have to be more careful when it's not there. Very simple. It's all things you learn on the course, but you also learn as you grow. And as you have a very strict risk management at the start, you can explore without actually ever being at risk. But what I'm trying to say also is, what people should think about is, let's say, if you want to learn the piano, yeah, you can do self-study
Yeah,
and you play and whatever. Will you ever play in a concert hall? Probably not,
probably
right?
not.
Right? It's the same. I'm a big tennis fan, right? So I'm playing tennis. So if you want to improve your tennis, yeah, you can play a lot, but actually, sometimes you need a coach, right? And the reason you need a coach is not because I never want to say I know everything. I know a lot, and there's not many people out there that know a lot more than I do, because I know a lot, but you never know everything. So the idea is not that I want to say, oh, you have to work with me because I know everything. No, but I know the important stuff. And the important stuff is what keeps people alive in P&L terms, right? In account terms. If it's the same like in sport. Like I said, if you want to become a tennis player, there's sometimes something that coach tells you not to do, because otherwise you hurt your arm long term, or you have to, tweak something of the stuff you do. I'm not against self-study. The only issue with self-study is people don't even know what they should study. That's the problem, right?
Yeah, too much of information there. It's
Yeah,
useless, basically.
yeah. So the other thing is, there's so much, and to be honest, I cannot tell you how many students I had that sadly fell for some of this YouTube stuff or other stuff, which they followed some practice someone does until they realize it's absolutely crap, right? You have to learn this proper, and that means you have a trader, right? I don't want to say, oh, only traders can teach and every trader is good. No, but when you do your due diligence, at least make sure someone worked in the industry for a while. He may not have been the best trader, maybe he was the best trader. Who cares? But what you can be sure of, he at least knows a lot about it.
But how do
Right?
you find the right mentor? Let's say I want to start trading.
Yeah.
I'm trying to find the mentor, but I know that most mentors kind of portray themselves as successful and so on and so
Yeah.
on. But so trust here is an issue.
Yeah. Oh, big time. Big time. To be honest, there I'm very lucky. I have, like I indicated earlier, I run a chat room. There's like
Yeah,
4 or 5 channels. One is charts, one is macro, one is I show my risk or what I trade, live trading. not in a signal kind of sense, but just so people learn what I think, what I do with it, and so on and so forth. And so everyone who is interested, I invite for a 1 week in there for free, have a look around. And that is actually where they go like, okay, that guy actually really knows what he's talking about because they see my work, right? So
Yeah.
always make sure, whether this be me or if you go out there and look for, always try to find work from these people, right? So what do they actually talk about? What do they write? What do they actually know what they talk about? So let's say if I would seek a tutor, I want to hear something on a current topic, whether it's the Fed meeting or Bank of England or BOJ or US politics, just something that gives me an idea whether they actually know a little bit more just than the surface knowledge, right? So that is important. So that's why, for me, let's say the chat room is ideal because I put people in there for a week. You have a look at that, right? You can ask a question on. I have a one-on-one chat with everyone as well. And I said, you go there, you see, and to be honest, in my case, I let my work speak because I don't need to say much to that because they see the work, they see the pace. I had one call last week, the guy in Dubai, and he was a week in there, and then he said he's now actually starting lessons, and he said, oh, I offer everyone a call. So when I send out my details, we have a 1 hour call on the
Yeah.
Zoom to get to know each other. And then after the call, he said, listen, I was already kind of interested anyway, but I needed to see you because I thought that all the work that happens in all these chat rooms from like 12 hours a day, he said, he felt definitely I have both somewhere, IE, which writes my stuff or this or that. He said, it's not possible. I said, listen, this is how we tend to work at investment banks. If you work at a US investment bank in this job, that's a bloody high pace world, right? And I still work at the same pace, which is sometimes a bit frustrating for me when I have to do, not with the students, but with other elements of the economy that just is very slow or very, not accountable, let's put it this way. So it's a high-paced world. This is what you learn. This is what you need. If you want to be a full-time trader, it's a crap job when you lose money, right? It's
It
the
is.
worst job in the world, right? It's the best job in the world when you make money. But you have to learn to these emotions. Now think about it. I'm doing this for 40 plus years. How many times did I get hit in the face, right? You
A
get
lot.
up again, you go again.
Too
right?
much.
Too much, right? So
Yeah.
the longevity or the sort of thick skin you need to build, right? So most people are in the beginning not even capable of that, right? Because tell you one thing I always said, you will see the best traders when they lost money, how they dig themselves out of a hole. That's when you see a good trader. Making money, yeah, you can just be lucky, right? But where you see the best traders is when they recover from losses, from setbacks. That's when you see the really good traders because that's very, very tough, right? And so that is where retail, the average retail fails. Well, it fails on so many levels. I can't even, it's a long list of failures, right? But the emotional side of it, and that's why that is a big part in my course, is psychology, because if you don't plan your trading, if you don't plan your risk management, you're subject to your emotions, and your emotions going to take charge of you and run you straight into a brick wall, right? So you can be sure of that, right? So
Yeah.
it's
And
work, right? And to be honest, I had a few guys now that sort of done exactly the right thing, because what happens in this job, if you take it serious, you learn first. It's a lot to learn it first, and then you sort of grow. And most people stick to my chat room because they always have me. So the relationship changes from tutor to mentor, right? So they can always bounce ideas or ask or this and that. And so they go through their first 1 or 2 years always having me like being their wingman. And then they sort of come to a level where some earlier, some a bit later, where they suddenly are able to put stories together, put the narrative together, start to understand, oh, this is this and this is that. It takes time. And it's not just taking time to learn, it's also taking time to observe. Because what we do is when people learn with me, I only do like one session a week. So their job then is to go away and actually observe
And
what
to
we talked about,
practice,
right?
practice,
Yeah.
learn
And
the
I think,
theoretical stuff as well.
yeah. So the
Yeah.
most powerful in that is really when we sort of learn stuff and then they go away, then they see stuff happening from what we discussed. They suddenly go, like, oh wow, oh yeah, that's what we talked about. Oh yeah, now I see it. I say, yeah, the topics are important, but the big plus if you learn from a professional is everything you can't read in a book, right? Because everything is nuances. Trading is nuances. Yeah, there's a few hardcore elements to this and not that, but at length, if you talk about a trading career, it's nuances.
By the
Yeah,
way, there is
yeah,
a theoretical knowledge and there is a practical trading experience. Now, how do you balance each and one of them?
correct. To be honest, this is why I quickly tell you something. I next to the fact that I have a lot of retail traders, I also getting calls from people that tell me, "Oh, yeah, I've done all the macro courses there are." Then I sat down and realized I can't trade. Right? That's exactly that. Right? So what we do here is all the elements, because my course has all the trading element and the macro element. And what I do, and what probably would describe me best, also as a trader probably, is I do tradable macro, right? Tradable macro means what? Yeah, of course, I don't really care if someone says like the banks do in January, oh, the euro is going to be 120 at year end. Who cares, right? It may not, right? But what is important is these sort of narratives that we have, these multi-week narratives of trends, where we know exactly what happens from the data, we know exactly where we're leaning, Fed cutting rates tomorrow, blah, 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 blah. The whole sort of macro packed into a tradable narrative. This is what people
But as a macro trader, you need all the information that the institution has.
Yeah,
So
no, I do. I look at the same stuff. You read, you have everything there, right? The only thing, well, I even get sent research from banks. Not that I care much about it because usually
mm,
it's not very good. But I know I read it because need to know what people think. To be honest, that is where knowledge comes in. I can read every Bloomberg page or every CNBC or everything out there. I see the data, right? I have a squawk box that has to do with your setup, right? Which I can read all the news all day long. I know exactly who speaks what. So I'm a bank. And to be honest, I have clients in my chat room that are from tier one banks or hedge funds that tell me that my stuff is better than what they get from their banks. It also has to do with the fact that I'm free to speak, which banks may no longer be as free to speak because they have to be a bit careful what they say. Um, but it's to be honest, this is like that's why I say I have nothing what banks don't have. I even have one advantage over all them, and that's what I also hammer home to my fellow retail traders is when you work for a bank or a hedge fund, you have institutional FOMO, right? I had it, which means what? Which means you sit there as a trader, right? You have your boss walking behind you. You like short euro, the euro rallies 150 points, right? And you get stopped out. And your boss behind you says, oh, euro's going up. Oh, how much are you long? How much money are we making? And we're not making any money. So reality is when markets move, your boss, and everyone has a boss when you work in the city, right? Um, when the markets move, you're always expected to be on the move and making money. That creates institutional FOMO. Now, when you're a retail trader, that's actually the sweet thing. It's your money. There's no one behind you that says, "Oh, you should have seen that, right? You should have captured that move." No, you don't. Some you do, some you don't. Who cares? So you can actually as a retail trader, you should never even be in a situation. This is what the one thing I work very quickly on retail traders to make sure they get rid of FOMO and hindsight. Those are the two most evil attitudes you can have when you're a trader.
But they
Hindsight.
do help though.
Huh?
They
No,
do
they
help
don't.
though. They
No,
don't?
no. Formal. So let's just say this, right? And this happens 7 out of 10 times, 8 out of 10 times. Let's say dollar rallies 100 points overnight in Asia. Europe comes in. Dollar looks still big. So they're all buying. 2 hours later, dollar drops, right? There's no follow through. So you have to, and this is something you learn also over time, is when there actually wasn't really a story for it for a follow through, right? Yeah, sometimes there is, but if you don't fall for all breakouts, to be honest, and what I teach is my experience. You know, I've done it wrong firsthand myself, right? In my early years in my career, obviously as traders, you have like these big order boards, you have big stop losses, whatever. Let's say this is the time before e-commerce, right? So if like big stops, you see like a trend line and a big stop below and go, oh, Jesus Christ, this is going to collapse, right? So you sell, you end up like short a lot because you have to cover for the stop loss as well. And it's a bloody low, right? It bounces. Stop loss isn't done. You like limit short at the low, happy days, right? Lose a lot of money. So now over time, you realize that actually breakout trading is total bullshit. Sorry, my language, but it is. 7 from 10 times is no follow through. So trading is about probabilities and odds. That's it, right? So if 7 from 10 times or 8 from 10 times, we don't have a follow through, that means you should be on the other side. If you see a trend line, a support line, you buy it. You're not selling the break, you're buying it. When it breaks, okay, you stop out. You will make money 7 out of 10 times. Going with the chart, not against the chart. Because people have this tendency of they want to trade breakouts because they feel breakouts means bigger moves. No, breakouts also means they fail very often. And people are then not disciplined. You can do, I'm not against breakout trading, I want to say this, but you need to know how. If you sell a break and it comes back, you got to stop out. You're not going to look for reasons why it should drop. You stop out. If it breaks a line, you sell the break and it comes back through the line, you got to stop out. Because otherwise you short at the low. So it has to do also back to risk management and discipline, right? You can have any strategy you want as long as you know what to do with it and how to manage it, right? So I'm not against breakout trading. Just when I look at a chart and I see a story and I will probably go with the line, not against the line. But if the line breaks, I stop out. And if I then feel, I may still join the breaker. I may or I may not. That depends on the situation.
It's all about the risk management at the end of the day.
To be honest, all roads lead back to that, right? So you can do everything. But what I've seen in my career, and again, I've done the same mistake when I was younger. I sell a break. If that didn't work, instead of cutting, I then scan the market for stories that favor my risk. If you arrive at that point, you're in trouble, right? Because the news should find you. This is how I trade. I'm not taking risk and then search for the news. My risk is based on what I see or what I feel. It's not the other way around. And this is what, like I said, the list of mistakes from retail traders is endless, right? It's endless. And some may be lucky. To be honest, there are, and I would never dispute that. There is one in God knows how many, which just has a flair. He has no knowledge, but he makes money. Those people exist. But 99.9% of people are not like that, right? So when they see someone that just happens to know nothing and makes a lot of money, think about it. He is almost a museum piece because those people don't exist that often. They do exist, but very, very rarely. So you have to learn, you have to practice, you have to be like patient with your development. You have to learn to walk before you run. And so it needs quite a, let's say, the last thing I would say to this is you need to love what you do. This is a tough job, right? Especially when you think of full-time trader. This is your job. You know, some people think it's a lifestyle. Yes, it's a lifestyle in some ways, but it's a job. And how do you do your job? You do your job has hours, right? And so it's over and over again. So I think people should, and I always tell new students, or before they even embark on the journey, I say, listen, that job looks a lot more glamorous than it is. Yeah, if you can make it work, it's like I said, it's a great job, right? But it's not as glamorous as people think. It's not like, oh yeah, I work 2 hours a day and whatever, right?
Yeah.
Kind of thing, right? It's work and it's tense, right? And that's also what people have to learn. Some days are tough, right? When stuff is going against you, right? And so on and so forth. So you have to do it for a certain period of time to then realize how you get better and whether it is for you or if it's not for you, right? Like I said, it's not for everybody.
Yeah. And as a former institutional trader, what advice would you give to traders who transition from trading for themselves to managing funds for others,
Yeah,
especially regarding the added pressure?
yeah. To be honest, I think there's like two different types of conversions. The
Yeah,
forms,
from institutional trader,
yeah,
from institutional trading to retail trading, and from retail trading to institutional trading.
yeah. No, so from institutional trader to retail trader, I would just say um, what I meant is there's two different types. Is if you are a spot trader in a bank and you have like a franchise seat and you make most of your money on client flow, that guy may not necessarily be very good when he has to take his own risk because a lot of people back in the days, 80% of spot traders weren't necessarily very good in directional risk if they had no flow, right? When you and this is a learning process. The moment you come out of that job, you suddenly sit in front of an empty piece of paper, right? It's suddenly getting a lot harder, right? Because you have nobody giving any money to you. You have to make it yourself, right? So the transition is a lot easier for those that already were used to making money based on their own ideas, right? But then it's the transitions should be seamless. Then you just have to make sure that you have an equipment and a setup that you don't feel suddenly lost when you don't have your local economist or this guy or that guy. That's a very personal thing, what people need to be successful, right? And whatever you need, you then have to recreate that, right? Retail trader to institutional trader. And there will be a lot of people that now hate me when I say this. There's suddenly a lot of these so-called prop shops out there, which I get a call a week or two or three that someone says, oh, I'm so and so and I'm a prop trader. So I look at their profile, I go like, nah, you're not, right? But they signed up for capital by paying a fee, right? So
Mm.
let me just say this, and I say this for the record. Not every one of these shops is that bad, but most are. It's a fee-based business they run. They're not looking
Like
for the
like
net.
like a trading company.
Yes, yes. It's those who offer capital against a fee, right? And
Got
say,
it.
okay, if you make that challenge, if you earn 10%, you get like more money and you pay another fee and blah, 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 blah. What is it based on? It's based on that most retail traders fail, right? They pay a fee, so it's a fee-based business. If they're lucky from 100 guys, they find 2 or 3 good ones. Okay, fine. They may end up getting some capital. So they're selling a dream that doesn't exist, right? Which a lot of retail guys fall. So this is like, not sure, do you know the expression B-book with retail brokers?
B-book.
Yeah. So B-book
Actually,
basically is
I don't know about it.
so what happened when retail brokers started, they had what we call a B-book. That means they knew that 90% of retail traders lose. So they didn't even cover that risk. So the money the retail trader lost is the money the broker made, right? That's
Mm.
B-book. That has now been a bit outlawed, and a lot of brokers have given up on that and do it different and start to care about retail traders, blah, 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 blah. And now comes this new generation of prop shops or whatever you want to call them. So they based on the same thing. They say, oh, you can trade $20,000 and you keep 70% of the money you make, and you just have to pay 400, $500 fee, right? Yeah, you know what? It's the same principle. 90% is useless. They will lose that money, so they pay the fee. So it's a fee-based business. There's not many shops out there that really look for the next big trader. So that's the next trap people fall into, and they lose a lot of time, right? So they do these challenges, 3 months, 3 months, 3 months. Oh, almost made it. Oh, I pay another 3 months. You know, like it's. So if they would take that money, invest it in real learning, and then the rest of the money they actually use to trade for themselves, they would do a lot better, right? Or do the challenge once you a better trader. Let's see how far you get, right? So going from retail to institutional trader is rare. I don't want to say impossible, but what is possible as a retail trader, next to that, you can make a good life for yourself if you're serious about it and learn. And I've seen people that I worked with that started to manage some money. So if we call that institutional as well, then there is a way to institutional trading, right? So they use their own track record in order to, usually it starts with family and friends maybe, and then maybe, that the guy is lucky enough to know someone who has a bit more money. And so I reckon every retail trader, once you start to be serious about, make sure you have you build a real track record, which includes risk management. We are not there to make money by rolling the dice. Every professional. So if you show me a track record, I look at it and I see in the first 10 seconds whether this is a serious trader or just someone rolling the dice. Returns don't matter if they're done by rolling the dice, because you can't repeat it, right? But if you see someone having like a real risk management and grow P&L and whatever, this is something you can take away. If you have a 1-year track record, you suddenly may be able to find to manage money, right? But then dealing with the pressure, then you come back to me and we sort it out, right?
Yeah.
Because that needs some psychology work again. But because most people wouldn't be able to do that on their own, right? That's just reality. So
Yeah.
this is not just to say that you have to do a course for everything, but there's a reason why 80 to 90% of retail traders fail. That's
Yeah.
just so the stats just speak for themselves, really.
So, any last advice that you would give to the retail trader that has just started trading?
You need to find a mentor. You do. Don't waste time and money. To be honest, I had people come to me. Some people lost 100, 150 grand. And I'm not that expensive. Right? That would be easy covered, right? So it can't be that you waste your money. So if you open a trading account, 5 grand, and you're gonna lose 3 grand immediately, right? So do it the other way. If you're serious about that, yeah, you can have a little go at it and blah 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 blah, right? But when you really feel attracted to it, you got to find a mentor, tutor, mentor. You have to at least be lifted out of this 90% retail trading on a different level to then look at the market in a different light. I usually tell people I lift you out of the retail world and put you on the institutional level, because that's your competition, right? You need to have institutional eyes to actually make money on a long-term basis, and you just can't do that on your own. So people, to be honest, if someone just trades for fun, okay, it's like going to the casino, yeah, why not? If you're serious, and most people think they're serious, and most people talk about full-time trading, you can't do it on your own. That is my message, and this is not to sell courses. This is just reality. You in such a different world to the real world of trading, and there's just everyone gets better at some point, but at such a slow rate, and you still may not learn the real thing, that you're gonna spend years and years and years without success. That's just reality. You got to find a mentor, right? That is my message.
Bit, thank you. Really. Thank you
It
for
was a
coming
pleasure
here. Thank you
talking to
for
you.
bringing up your insights. And it was a pleasure. Thank you.
Thanks very much. Thanks you for having me.
Bye bye.